Kenyans can now buy a stake in the Kenya Pipeline Company for as little as 900 shillings in a move aimed at widening public participation in the capital markets. According to the information memorandum, shares will be priced at 9 shillings each, with a minimum purchase of 100 shares per investor. The offer is expected to draw at least 2 million Kenyans into the capital market, marking one of the broadest public ownership drives in recent years. Jimmy Mbogo has more.
And helping us build investor confidence.
The sale of part of government ownership in Kenya Pipeline has been cited as yet another milestone in the Kenyan capital market. The government's move to sell 65% stake in the company, or an equivalent of 11.8 billion shares, is set to provide an investment opportunity to at least 2 million retail investors. According to KPC, Kenyans can now take part in owning the company, while at the same time helping the government to raise non-tax revenue, deepen the capital market and unlock the company's full potential.
The company is telling us, and we already passed H1, the company is telling us that the expectation on net profit is around 9.6, 9.7, so shy of 10 billion. If I look at that, and with a dividend policy that has been set at 50%, I can already project, expectation around dividend. And we're talking about 5 billion. Okay? We're talking about 5 billion. So for any investors, looking at it versus the number of shares that are outstanding, you can already project your dividend yield, which is above 3%.
Kenyans can buy the shares through a fully digitized eIPO process designed to make participation faster, easier and more accessible, including via a USSD by dialing star 483 star 816 hash, a quick and convenient channel that prompts investors to pay using M-Pesa. Investors can also apply and pay electronically, eliminating paperwork, long queues and the manual errors associated with past offers. Investors have further been assured of the company's solid financial health.
We are sitting with 16.2 billion in cash. 16.2 billion in cash and pretty much no debt, all right? Pretty much no debt, because the 3.3 liability that you're seeing reported in the accounts as borrowings is pretty much short-term within the 12th month.
KPC management has further expressed optimism that the privatization of the firm will unlock more value by enhancing its efficiency. According to KPC Managing Director Joe Sang, privatization will allow KPC to go to market on time, taking advantage of viable opportunities and cutting back on unnecessary delays.
Pipeline, if you need something to be approved, and this is not only pipeline, it's government sector. First, you do it as EXCO. You take it to the committee of the board, it goes to full board, and then now you write to request your parent ministry to consider it. The parent ministry now will stay with it maybe for another 2 to 1 month. They write to National Treasury. So a process that will ideally take maximum 2-3 days will take 3 months.
We're excited to see you out of the PFM, out of the PPDA, out of SRC, out of cabinet memo, out of the budget process. So we strongly believe with that behind you, you would likely grow perhaps stronger or higher.
Kenyans have been urged to take advantage of the open window, which will close on February 19th before trading begins later in March. The government hopes to raise 106 billion shillings, out of which they will receive 103 billion shillings from the divestiture. Jimmy Mbogo, Citizen TV, Nairobi.